Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. It's always interesting to talk about aggressive growth stocks with Bill Wilton, our aggressive growth stock analyst at Zacks.com. And there's a couple here that you have called out for us that I don't know if I've ever heard of, but I'm sure you'll fill us in. CN Insure is the first one, CISG, the ticker symbol, not property casualty insurance, right?
Yeah, but the unique part about this is they actually sell insurance, property casualty, other financial service products, but they are exclusively in China. So, we've heard a lot about the red-hot Chinese economy.
Yeah.
Whether or not it'll continue is to be seen, but right now it's looking very good for the insurance company. They focus on the developed regions, the more wealthy cities in China, and they actually don't underwrite the policies that they write. They just distribute them, so they've got fewer moving parts. They've got less risk. So should things collapse, I wouldn't be as worried about it as some of the actual underwriters would be.
I think with no underwriting, there's more risk, wouldn't you?
Well, they're just. If they're not underwriting it, then they actually just distribute it. So they're kind of the middleman. They don't have the financial liability should there be a big natural disaster that affects a lot of people.
Yeah.
They just reported quarterly results. They saw a 33% spike in revenue. They're up over $40 million for the quarter. That was back on August 26th. So they've got it's a bit stale, but they are heading into their next quarterly report in a few weeks here toward the end of November. They reported 27 cents earnings per share, which beat the Zacks consensus by about a dime, which is fantastic. It was their second consecutive earnings surprise. They also saw positive comments from their CEO, which is always good because oftentimes guidance is just as big, if not bigger, than the actual financial results for these quarterly updates that companies are providing.
These days, yeah.
Yeah, and the Zacks consensus estimate is also up. They saw quite a few revisions over the past month. We're looking at 85 cents a share for the full year, and that's up from 75 cents prior to the report. The other thing that I like about them is they're still a decent value. Granted, they're trading at about 22 times forward earnings, which is not too bad for a Chinese company. And the nice thing is once you factor growth into their PEG ratio is under 1. It's actually at a 0.8. Which means that we're getting that growth at a pretty solid value. So I like that play out of it. One thing about them, though, their share price has come down a little bit. But what I see this as is more of it's an overreaction to the recent market worries that we've had, not just in the U.S. but globally. So I see this actually as a better entry point into this company rather than a sign of weakness.
You're waiting for me to remark about that, what you said, not too bad for a child. I'm not going to go even down that road. We'll let you field the emails on that one.
All right.
Rogers Communications, RCI, the ticker symbol. I'm just wild guessing communications business.
You guessed it. What they do is they provide wireless cable broadband services for Canada. So kind of like like our AT&T or Comcast here. It's a Canadian version of that. On the 27th, they released operating results for their third quarter. They saw revenues rise 2% to just over $3 billion, which led to a net income of 78 cents a share. And that actually blew the estimates out of the water. Analysts were only expecting about 51 cents on average. So obviously it was a great quarter for them. They also see double-digit operating profit growth over the next few quarters, and analysts have been raising their estimates on this company as well. We're seeing the full year estimate average of $2.19 a share, and that's up from $1.87 prior to the earnings announcement. You can see on this next slide they're also trading at actually an even better value than the one before, just over 13 times their forward earnings, and they're still maintaining that Zacks #1 rank. One interesting part about this company is that they're actually breaking out of a trading range here thanks to that earnings report. So I'm looking for this resistance level, or actually former resistance level that I've highlighted here, to act as support, and it could help them rally and continue to grow further throughout the end of the year.
Do you find yourself in this kind of an environment having to look more outside of the country for these aggressive growth picks?
Well, I mean, in in any environment, you know, it's always good to be looking elsewhere. You want to be globally, especially with aggressive growth. One, because you want to look for lesser known companies that have fewer analysts, because it allows you to find more discrepancies between what analysts are expecting and what the market has priced in right now. So I find that the lesser known companies end up giving you those big boosts in earnings estimate revisions that will then lead to bigger jumps in the share price. So, you know, I don't always look outside the country, but, you know, I'm more of an equal opportunity employer. I'd say I investigate all regions equally.
All right. Do you own either of these two?
I do not.
All right. Check out more aggressive growth stock pick ideas or stock pick ideas in any of the other investing categories that we write about on Zacks.com's homepage in the upper right-hand corner, where we put 4 new stock pick ideas for you each day, one in each of the investing categories. With Bill Wilton, I'm Terry Ruffalo.